Hi, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment markets to help hopefully soothe some of your anxiety about a lot of the turmoil we've seen, not only in the equity markets, really in the last probably 8 weeks or so, approximately a 12% decline in most of the major indices and averages. Now, while these are expected over a long period of time, just to give you statistical numbers, historically, we see a 10% correction in the equity markets at least once every single year, often twice. So this is kind of, similar to what we've seen in the past. I think probably the thing that I've talked about before is it's telegraphed substantially more with the media than it was 20 or 30 years ago. So while these swings are no different than what you've seen over, decades and decades ago, the media telegraphs this stuff so often. Basically, I think it just really almost scares the investor thinking things are different today. Now, while I believe we have a 60% chance right now of going into some kind of a recessionary period, we are definitely in a slowdown. We're watching the numbers very closely. As I've made a comment on previous update videos, we have raised some cash. Our long-term and intermediate-term market trend indicators have signaled a sell in various equity markets. We have done so. We don't immediately sell every single equity position out, but we are using these as a fail-safe. We're going to see how things progress through the week. As we all know, Obama is going to be speaking about the supposed rabbit out of the hat, as I'm going to call it, this special jobs creation factor. I think ultimately what would happen when he does speak is the market, who knows, could rally and then could maybe start selling off again. I think ultimately the government in general, not just Obama, but all Senate and Congress, ultimately does not have the best interests of the Americans at heart. They're politicians. And when it comes down to it, you need to create real jobs, private sector jobs, not government jobs, to really grow this economy. Now, as I've talked before, I truly believe that the U.S. economy is in a very mature stage. And it's going to be hard to grow the unemployment level, to really bring the unemployment level down and grow meaningful quality jobs in the long term. I think ultimately it's not going to affect retirees, but ultimately I think grandkids and your kids are going to have a much more difficult time in the next 15, 20, 30 years, especially as they approach retirement. And I think ultimately people need to save more and spend less. I think the government's done a great job of overspending, which obviously is not a positive, but ultimately we need to bring our budget back into line. And I think part of that's not only going to be raising taxes, but also cutting expenses. I think ultimately we can really get this economy back chugging along and bring the numbers down on unemployment, but probably not to the extent that we once saw a decade ago. I think higher unemployment than normal may be the norm here in the U.S., unless really, again, our politicians can really put the best interests of the Americans at heart and really ultimately do what's right instead of being politicians. We continue to watch the numbers overseas. I think the problem that we're seeing probably most often right now is really Europe. Europe's been kicking the can down the road with their problems of debt in various countries for years and years, and this seems to continue today. I think our biggest risk in the overall world economy is Europe at this point, and they really need to address their debt issues, austerity measures in various countries. This means cutting back payments to people who retire at age 45, 55 years old, really getting their budgets in line. Greece is a great example. Italy's another great example. There's many other smaller countries out there that are in this mix. When you throw a lot of small countries in the mix, that adds up to a larger country, and any of those type of ramifications of debt consolidation, austerity measures really will have an impact, a long-term impact on the world economy. And those are things that we're concerned about. But Europe, for some reason, doesn't really get it. And I think until they get it, we're still going to continue to see this rockiness, not only the economy, but the markets, and these drastic up and down movements. Hopefully, the politicians and the people that govern Europe economies will ultimately do what's right, like the U.S. should be doing. We continue to monitor all of our indicators closely. We don't have a problem raising some more cash if we need to. As I made a comment before, our relative strength indicators for obviously the month of, as we ended the month of August going into September, continue to signal gold as one of the strongest relative strength indicators. We continue to hold that in our portfolio. We have not added to that recently because we do own a healthy position, but we will be making a change at quarter end, so expect that. Every single quarter, we will basically, in relative strength terms, put in the 5 highest relative strength asset classes within the portfolio, and then each quarter after that will drop, or each month after that, excuse me, will drop off the weakest one and add the strongest one for that following month. Always holding 5 ETFs within that portfolio, but again, we continue to hold cash, we continue to hold a large portion of bond-related investments, and gold, so I feel we are well buffered against any economic downturn, but we will not be afraid to raise more cash or even go in inverse ETFs that basically correlate on the opposite of what the equity market does. Inverse ETFs go up when the equity markets go down. We don't have any of those currently in our portfolio, but that doesn't mean we may not add some of those if, in fact, some of the numbers continue to deteriorate and we go into a more definite zone of recession. This is Brian Resney with the Resney Wealth Report. Make sure you do listen to the show Sunday. And as always, if you have any friends, relatives, or business acquaintances or workers that you'd like to refer to Resney Wealth Management, we always appreciate your referrals. Whether they want to sign up for our newsletter, again, that's free. They get the video updates every single week. But of course, we always enjoy bringing on new clients. Think about us when you're talking with your friends and family members, and send and pass on our name, or at least direct them to our website where they can sign up for our newsletter for free. Until Sunday's show, make sure you have yourself an extremely profitable week.